Okay, what's up YouTube? I am back. We're going to get right into the stock market technical analysis. Again, we're looking for trade ideas that profit. So if you guys are finding value in that kind of content, you're really interested in following along with the markets, and we're going to use the charts to be our guide, then, feel free to subscribe, hit the like button. I do appreciate that. It helps the channel. All right, let's get right into it. We'll start off with, the NASDAQ future. So I've been looking at stuff all morning. Just trying to get my bearings as I'm getting back into the market and the charts. And what I see here, I'm looking at an hourly chart right now. A couple of things. On the hourly chart, we have this bullish falling wedge pattern right here. We've got a couple reactions to kind of validate that. So there's the high. We've got another reaction there, another one there. And it looks like we're starting to break out. This is delayed slightly, but I suspect it's not going to break out today, but it looks like it's going to. So again, let me get rid of that. Again, this is basically kind of at resistance right now within this pattern. On the downside, I really have kind of two reactions, so I can't fully say it's a wedge yet. But I do have bullish divergence for sure on the hourly chart on both momentum indicators. So what I'd be looking for is a potential breakout, some sort of a pop out of this wedge. And if we do that, the measured target of the wedge is typically the widest part of the wedge, which is about right there. And that basically sets us up, if I can grab the line, that basically sets us up for a move, up to about this 12,550 area. You can see I do have a line right there. There it is. Drag that out. So that's the measured target. Now, if we get that close, and we're right there, I could easily see us run up maybe intraday or something and making a slightly new high. Okay, if we do that anytime soon, I'll go to the daily chart, kind of give you guys the setup of how this could play out. So again, if we run up and hit this trend, this line that the measured target, and run up and pop and make a new high and do it relatively soon, we'll have negative divergence on the daily chart, and that most likely will indicate the end of this run that we've been in. At that point, you can see if we rally up here and we make a slightly new high, everyone in the media will be foaming at the mouth bullish, because here's what they'll see. They will see a bear market. All right, this is your bear market in triple Qs, and again, it's pretty much similar in the SPY. They'll see that downtrend line. They'll see a breakout, kind of a correction a little bit, and then just a continuation. They'll be looking at this as a bull flag. All right, and they'll think it's just off to the races, brand new bull market. That's what it'll sound like in the media, and everyone, you'll see in my comments, everyone will be really bullish and saying this is a new bull market. All the bulls that, go away when the market comes down, they'll all be back in the comment section posting comments about, how the market's going on to new highs and all that. All right, but what I think what we need to realize is at the point in time, if we do get that new high right here, and it is negative divergence, there's a very high probability it'll be a false breakout, a false move up, and we're going to come back down, probably rather impulsively at that point. So, all right, so there's the short term and kind of the longer term, what I'm looking for. Nothing to really take action today. I'm not really trading anything super heavily today, just kind of waiting for some sort of buy or sell signal to indicate our next position. Let's look at triple Qs. Same kind of setup. Triple Qs, you've got this wedge, this bullish falling wedge pattern, bullish divergence on the hourly, no breakout. There is some resistance right there, about 293. You can see that is the former. We've just had lots of reactions right there, and that's where we're at right there. So, all right, a break above 293 should be a bullish move, and I think we'll likely get, here's the widest part of this wedge. We'll probably likely get a move up. There's this downtrend line up here, so there's resistance for sure right up around that 303 area. So from my perspective, I don't think it would make sense to really remain long if you were long up into this resistance. Even though we might go on and make a new high, I'd prefer to probably just exit and maybe go flat or look to start to build short positions. We'll have to see how the chart plays out. But as of right now, zooming in, we're still just getting rejected at that 293 area. So an impulsive breakout and close above 293 should carry us up to about 303. Okay, so there's a short-term trade. And then again, flipping over to the daily chart, on the daily, if we go on and make a new high, it will be a divergent high, all right, on the daily. And so I'm really looking for that. I think that would be a perfect setup. As of right now, short term, it looks like we're kind of bullish and we could rally up to 303. And then as we get up there, if we get that negative divergence, it'll start to be a pretty bearish setup for, potentially the next leg lower in the bear market, which the next leg lower should take out these lows down here at 259, 260. I would think it likely carries us all the way down here to 238. That's my pre-COVID highs right there. This is kind of where the market was at before COVID hit. I do think this is where we are heading. So whether we kind of go up and then, the next leg lower, and I am anticipating another leg lower, I think that will be kind of the near-term target, about 238. So that's still in the cards. Guys, if you're new to the channel and you're interested in learning this as a skill set, I have a technical analysis course. It is not a day trading course, but it's about 4 to 5 videos going through various concepts. And at the end, I give you a checklist on what to look for high probability setups, how to manage risk, and in general, just skills needed for successful technical analysis. I can't manage your emotions. I can't teach you guys to day trade. I'm not a day trader per se. I do day trade sometimes, but for the most part, this is swing trading. So if you're interested, check out the course, link in the description below. And then finally, if you want to join the private member group, all week, even though I haven't put out any YouTube videos, I have been giving guys trade ideas and posting stuff out in the private member group in the member section on YouTube. So if you're interested in kind of getting additional market insights, additional trade ideas, it's $5 a month. You can cancel anytime. Check it out. Link in the description below. Okay, and then we can look at the SPY real quick. The SPY, for the most part, just follows the triple Qs. Just the triple Qs is so heavily weighted in the SPY. It just does really control a lot of the movement. SPY, if I roll down, this is the daily chart here. As of now, I don't know if it's going to stick, but as of now, it's a bullish engulfing candle, so maybe this is signaling some potentially more upside. If I go to the hourly chart, you can see we have that bullish divergence right here on the hourly. And we do have, I was trying to make the wedge very similar to the triple Qs. It's not as clean, but I could say that, we had a reaction here, and then maybe another one right there. So, again, in general, in the short term, it looks like the markets want to bounce maybe one more time, possibly putting in a new high, kind of over the highs that we just saw back in February. Possibly not. I'm not too sure about that. But short term, with these bullish divergences on the hourly, we're kind of pressing up against resistance. We just need that little catalyst to pop us over, and we should have, a run. And from here, I think we could rally up to about 408. Well, we'll say this one at least 404.50. It's about a 2% rally up there. Potential to rally up, maybe a 3%. And then obviously, if we take out the highs, that's about a 5% rally or so. So about 5% upside, I think, would be the max upside, 5-6% max upside. And then the downside is, there's a lot of downside. So, if you're not too sure, maybe just sit flat, or, I think just smaller position sizing makes sense right around now. Okay, let's look at gold. Okay, so we'll go to gold futures. Here's gold futures looking at the daily chart. Again, from what I can tell, all right, we're big sideways pattern really over the last couple of years, going back to 2020. It definitely is a big sideways pattern. Is the end of this run here, is it finished? I don't think so. Okay, this was a nice, it was a big wedge, big bearish rising wedge. It finally broke down, corrected, hit that long-term support, decent support right there at about 1810. We hit that perfectly. I have it kind of marked out, all the tags and reactions at that level, and we just hit that as support. We're bouncing off that support now. So far everything looks good. I don't think there's really any indication that this rally that has started over the last few days is finished. We don't have any divergence really. So again, I'm looking for higher highs here. All right. In general, I'm kind of looking at gold as, if I roll out, you really have to look at the bigger picture. This thing's been in a bull market since about 2015. All right, you've been making higher highs and higher lows. Doesn't go straight up, and there's periods of correction within a bull market, but higher highs and higher lows. We then had a big correction right here. This is a multi-year correction, 2022 to, well, it lasted at least, at least partial part of the year. And then that correction's over, and I think we're continuing that bull run, the bull run that is, that was really starting back in 2015. Also, if I go to like a weekly chart, and this is just bigger picture stuff, so it's not necessarily going to play out in the next week or so, but this is a cup and handle pattern. So you have a big bull run, then you make a kind of a rounding bottom / cup and handle. So there's the cup, the handle is basically there, and this likely resolves to the upside. All right, so that's kind of how I'm viewing it from the bigger picture. It doesn't mean it's going to take place, in the next few weeks, but that's the bigger picture. And I know a lot of people ask me to do analysis on the dollar. Here's the dollar futures. We're looking at the weekly chart. Now, again, a lot of people think that the dollar moving up is bearish for gold, and the inverse is true. And for the most part, that is typically the true, how that is. But there are times of disconnect for sure. And then additionally, you'll see here on the weekly chart, we do have, decent sized negative divergence there on the PPO that's been building, and kind of flatline divergence right there on the RSI. So, this weekly chart, these are divergent highs right now on the weekly. Doesn't mean that's going to play out anytime soon, but keep that in mind. All right, that we do have negative divergence on the weekly chart. Nothing really on the daily. So obviously, I think we could continue to rally and maybe hit the 200-day. Doesn't mean gold is going to necessarily go down. Maybe it just goes sideways. I could see the potential for gold to come back down and do a divergent low as well. If I flip back to gold, okay, it's completely possible. If I roll kind of back to the daily, and this is the gold futures, it's completely possible that gold comes in and does a little, let me grab the right tool, and does a divergent low. Something like that, make a new marginal low, still hold that support for the most part, and then rally. That's possible, so be prepared for that. I don't really have a whole lot else. I've been scanning around. I mean, there's obviously little things I could go through, but for the most part, covered kind of the general stuff. So guys, drop me a thumbs up on your way out. I'll catch you in the next one.